Hello, 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 everybody. Mike Arnold here, co-founder Pat Trading Partners, along with Bob. Man, all right, I messed that up. I messed that up. I learned from the vice president today. I have to do my introductions differently. So even though I'm the co-founder of Pat Trading Partners, along with Bob Iacchino, I have to reintroduce myself. I am Mike Arnold, a Caucasian male with a shaved head, going by he, him, his, and I am wearing a tie-dye Grateful Dead Terrapin Station shirt. And just for the record, no turtles were harmed in the making of this shirt. And I'm the co-founder of Path Trading Partners, along with Bob Iacchino. Hopefully when Bob gets on, he'll introduce himself correctly also. Just have to make sure nobody told me all this time I was introducing myself incorrectly. So please correct me on these things. I was unaware. Good afternoon, Wavy. Some big misses across the board. Google. Google is down slightly, but missing on top and bottom line, or Alphabet. I will always call it Google, just like I'll still always call Meta Facebook. So hold on. That's Bob dialing in. He better be prepared to introduce himself like our Vice President of the United States introduces herself. So when I bring him on, if I don't get a proper introduction, I'm booting him right off of here, along with everybody on here. Google missed. Good afternoon, Patrick. Microsoft also missed top and bottom line. Good evening, Anissa. Good afternoon, Davey. Good afternoon, George. CMG keeps dishing out the burritos. Noticeable menu price increases across the board recently to pass on to the customer. I did not have a chance to look at. I was focused on Alphabet, Microsoft, and Visa. Visa beat and was a slight gap up so far. Hey, Waka Waka. Good trading day. Glad you had a good trading day. Nice sell off today. Consumer sentiment numbers missed, and services index numbers also in the toilet. Hey, AP's World. Thank you. We'll bring on Bob in 1 second. Good evening, Eric. Yes, we already covered a good. Google and Microsoft missed. Too many details. Hi, Eric. Mike's intro was gold. And Bob, you missed my intro. But did you harm and dice? I don't understand that one, Davey. Wow, you guys have an HR department. Congrats. We do not have an HR department, else neither of us would be on YouTube. Hey, no turtles were harmed. Yes, because it's Terrapin Station. You are introducing yourself just fine. Good afternoon, Jacob. Miss and Pop, what a joke market. Bob hitting the bong on the background. No. Bob's right here. Bob is right. Yeah, I know you heard Bob in the background. Here is Bob. The brick wall is back. Bob, introduce yourself correctly, please.
I'm sorry, I'm Bob Iacchino. My pronouns are genius and handsome, and I'm a man sitting here in a blue V-neck.
A blue. Well, now I know how to address you properly, Mr. Handsome Man. I feel so awkward saying that. Were any turtles harmed in the making of your blue shirt?
There were not any turtles harmed in them.
Okay, good to know. Good to know. Oh, it's a tie-dye. Oh boy, we're going downhill quickly. This one's going to be demonetized and probably pulled off the live stream. So I'm grateful to everybody watching this live because the recording's going down. Let's see. Where do we sit?
Wait a minute. After my announcement, you want some sound effects, right?
Yeah, I want some sound effects. I don't hear anything. We're trying to do Kramer sound effects since we're. Oh, I heard something. They got to be louder. We got to incorporate sound effects like Kramer into this. And Wavy likes Bob's intros. Top G. Looking good, Dr. Michael. Again, hey, John. All right. Let me just review a couple things, and we'll get your thoughts on everything. So consumer confidence was a miss. Home sales.
Let's try this one.
What was that?
Hey, I'm trying this one.
They got to be louder. I can't tell what that was, but it sounds like a toilet almost flushing.
Right.
What are those? What
More
are those
guy.
sound effects?
Those are electricity sounds.
Electricity.
Yeah.
This is an electric podcast or YouTube. By the way, we're trying to incorporate Jim Cramer-esque type of. Maybe it'll get us more popular. So, we had new home sales miss. We had Fed manufacturing Richmond coming in at 0. A little better than last month, but the Fed services coming in negative, big negative, and Dallas Fed services coming in big negative. And look at our API crude oil stock change just came out, and that looks like a pretty big draw. Interesting. By the way, tomorrow, then we'll get some Bob thoughts. I got a lot to ask Bob. We got durable goods coming out an hour before the open, 7:30. Everything with that. We have pending home sales at 9. All the crude numbers at 9:30, and all those are Central Time. But remember, 1 o'clock Central Fed interest rate. And then 1:30, the press conference. Again, the press conference will be the biggie unless they do something other than 75 basis points. Pretty red day besides some healthcare stuff. Again, a lot of sellouts rotating to healthcare. Still, your retail's getting hammered. FOMC still tomorrow favors by 75%, 75 basis points. We're still slid back further into negative gamma territory, so moves can be amplified tomorrow. And Bob, Jim retweeted this afternoon. I have up the smooth U.S. recession probabilities from from Fred, from the Federal Reserve.
Yeah.
This is from the St. Louis. Could you tell me how useful this chart is?
It's completely ridiculous. I don't even know why they have it. By the way, Fred's taking their site down. I don't know what's going to replace it, but this is probably the reason.
I mean, is this not the most? Shouldn't they change their inputs to actually have some value?
Why don't you just say, here's a chart with recessions in it? That's it.
I mean, it virtually goes from we're below 10% to 100%.
And they line them up with the recessions perfectly.
I know. Besides these a couple little blips, you have nothing that didn't go to it skyrocketed instantly when we hit a recession.
Yep.
So it's no predictive value.
No, it's absolutely. It's sort of like, whoa, I broke my leg. It's sort of like the data, right? I mean, the data, if the Fed says we're data dependent and they're going to wait for data to come out and the data comes out, and then we'll all know what we're doing. From this perspective, when you look at something like this, it's complete. It has the same value as the National Bureau of Economic Research telling us it's a recession after it's a recession. I've started to kind of take almost a different approach to this and think to myself, why do people honestly even care if we're in a recession yet? Are you going to do something different in your life, in your day-to-day? You're going to be like, well, I was going to go look at new cars this weekend, and I think I can afford them, but you know what? We're in a recession, so I'm not going to do it. I was going to go to dinner, but you know what? It's a recession. I better not. If it wasn't a recession, I would, if all else was equal. But this is a recession, so, the vitriol that's going through. Somebody I really respect, Brian Westbury, is spending a ton of time on Twitter telling people this is not a recession and giving all the reasons why it's not. And it struck me when I read that, who cares? Honestly, who cares? Why do we care if it is or it isn't? It's bad right now. You want to call it a recession or not? I don't care. Call it one, don't call it one. I know it's really bad for people. The economy for middle class and working people is terrible. Don't call it a recession. I don't care. I'm going to call it terrible. There, that's what I've named this particular state of the economy. Terrible.
So are we in terrible times coming up? Terrible times, according to Bob.
Terrible times. That's what we're in.
Well, Alphabet and Microsoft sure headed into some terrible times with their earnings.
More layoffs. Spotify, 10% of its workforce.
Well, again, Spotify's tomorrow, or that was
Spotify's earnings are
Shopify.
tomorrow.
That was
I'm
Shopify,
sorry,
wasn't it?
Shopify. My
Yeah,
bad.
I
You're right.
was like, because
Canadian company.
Shopify's tomorrow morning, so they came out with their layoff announcement. Maybe they'll do some interesting things. Well, I guess their numbers are going to be so bad that they had to pre-announce their layoffs like the day
I mean, the
before.
numbers are going to be bad, and likely it's going to be one of those things where it's like, okay, the numbers are bad, but they're already laying off 10% of the workers, so let's not hit the stock too hard.
Oh boy! So what are your other thoughts? Or what are your thoughts going into? We have again tomorrow. Hold on, where'd my stuff go? I was so distracted by that smooth chart. We're going in first. We can't ignore, well, durable goods. Is it going to contract tomorrow morning, and is it even going to matter? And then, what are your thoughts on the Fed? And they're not just. Are you going with the 75 basis point baked in? But what's your view on their guidance?
Yeah, Jimmy and I were talking about that over Twitter as well. The CME Fed Watch tool, last I checked, only had a 75% chance of 75. And I
Correct.
looked back as far as I could find data for, and it's usually like the day before, it's upwards of at least 90. Like we're usually pretty sure. So it just kind of goes to show you there could be a pretty big reaction to the actual announcement this time. Normally, we know what the announcement's going to be, and we wait for the press conference for the statement. The fact that we're not at 90%, we might get a move on the announcement. I don't think the Fed, I'm sticking with 75. I stuck with 50 last time because I don't think the Fed is going to surprise, given some of the softness of the data and the weakness of the yield curve. I mean, the yield curve is so weak right now. You've got the 10-year yield basically back below, well, around 275. That's really weak. So, I mean, we haven't had the 10-year that low in quite some time.
Well, there's the
Um,
yield curve. I mean, or there's the 10-2's yield curve down at, wow, that's just tanking. There's a 10, what's interesting is look at this. Uh, on the yield, we've technically triggered the head and shoulders top.
yeah,
So that's going to be interesting.
yeah. So it's something. This meeting tomorrow is likely. So if you go back to the last meeting and then the statement, I don't remember if it was the statement or if it was actually the press conference where I'm sorry, the testimony before Congress that came after that last Fed meeting. Powell actually said that Michigan sentiment number really changed things for him, right? So if you think that, what the hell is all that?
I was going to say, could somebody on the live stream report that user and so it doesn't
We
keep coming
probably
up?
it is. Anyway, so he talked about how Michigan sentiment actually moved the needle for the Fed. If you want to consider that, then you consider that how weak recent data has been and how prices of crude oil, for example, gasoline has fallen. I found that funny. I looked at the AAA average of gasoline today, and from the high of the highest ever recorded, which was over $5, the national average for regular was over $5. Um, it's dropped around 12% since then, right? But if you go back a year, it's still 37% higher. And this has been my point about inflation this whole time. When you start to hear, we've done some work and the gas prices have fallen. I'm a he, him, and I'm in a white shirt and a blue suit. I don't remember who I am. But when he talks about the price having fallen, that's great. I mean, fantastic. Whether it's because of actions of the administration or just market forces, I don't really care. You're still 37% higher, almost 38% higher than a year ago. So even if we sit at these levels now, or even if inflation comes down, you're going to have things that are 20 and 30 and 40% higher and have not fallen from there. So that's going to continue to hurt. This is what I keep talking about with the index itself. It actually has to go negative for a while or hold steady for years again in order for the adjustment on wages to be made. It's a bad situation.
So, all right. So, what do you think the guidance is going to be?
Well, I suspect that they're going to say that they're going to stay the course because inflation hasn't moderated enough yet. Again, what was the last number? 9.1.
Yeah, 9.1.
I mean, is there going to be guidance that it's going to start slowing? I can't. I mean, if they do that, it's just like a joke, just a complete joke. So
That's what
it
I
just slower data. It's a complete joke.
Well, that's what I mean. I've seen too many people still saying they're gonna have to start saying they're gonna ease up or pause or something. But then we're definitely gonna repeat the '70s. With inflation might dip a little, but there's still, as I talked about this morning on the live stream, housing is 4 to 6 months lagging in inflation figures, and that's still through the roof.
Right.
You still have a lot of stuff. Services are starting to get entrenched with some inflation, and that doesn't go away easily.
Right.
So yeah, if we get some kind of dip even into the sevens year over year, and we're gonna pause, it could dip a little further, but then it could skyrocket back up.
Yeah, we talked about this before. Services inflation is stickier because it's basically like wage gains. Wage gains are very sticky because once you get a raise, you're not letting that raise go. And nobody's coming over and saying, so by the way, a lot of our inputs have dropped. So we're going to take that raise away. It just doesn't work that way. Wages, they either lay you off or you keep your raise. Neither one of which is going to be good long-term for the economy. And we've already seen more, as we already mentioned, we've seen more layoffs now. So,
And more pauses in hiring, at least. It's like,
yeah, Google with the 2-week pause. I mean, that's going to continue. That's not going anywhere at this point in time. So,
wait, who did I miss? Hello, Lauren. Got to say hello to Lauren. Look, Jacob's right. That's how you can tell PTP is on the map, because we're getting spam bots.
Can't believe we got a spam bot.
Hey, we've made it, Bob. We have naked spam bots going.
Oh my God.
Isn't that the ultimate in YouTube live streaming?
Fantastic.
So, what other thoughts do you have based off everything that's going on?
Earnings are not that great. I know people have kind of talked about how they're not that bad, but I look at them more as not that great. When you look right now, the forward 12-month PE as of Friday is about 16.7. That's below the 5-year average and below the 10-year average. It's not that often that we get that. Obviously, it's a very small sample set. 21% of S&P 500 companies reported as of Friday. Okay, so with that, 68% have had a positive EPS surprise, and 65% have reported a positive revenue surprise. That's also below the 5-year average, but not the 10-year average. And then lastly, of the 11 companies that reported as of Friday, 10 issued negative guidance. I'm sorry, let me rephrase that. Of the 11 companies that issued guidance, 10 issued negative and 1 issued positive. The vast majority of them suspended guidance. So to me, none of that is very good. But as we've talked about many times, you've had a lot of equities will go up unless there's really bad news down to the downside. And the earnings haven't been bad enough yet, except for places like Walmart. So overall, today's sell-off, I think, was probably a resumption of something a little bit more sinister. Tech earnings could save it, but no one's expecting that from Meta. No one's really expecting it from Google or Microsoft. Sorry, Alphabet. So this is a pretty critical week with the Fed meeting and the earnings. So that's kind of what I'm looking at. I think it's weird to have such an important Fed meeting in the midst of probably the most important earnings week. A lot of people are saying the bottom is in. I still don't agree.
I don't have a long-term buy signal again yet, so I still have to go with the long-term sell signal. I don't see. I mean, we could go into earnings compression, and remember, if once you're in a recession, the average drawdown is 37%. The average is 37% for the S&P. That's the average.
Yeah.
So, we'll have to see. Uh, what? Well, yeah, we Biden economic advisor, 2 negative quarters of GDP growth is not the technical definition of a recession. We've already talked about that. It's actually not the technical. That is a true statement.
Yeah, it is.
But I like how they're getting ahead of the curve because the GDP is probably going to be negative 2 quarters in a row, and they're going to be like, "See, no recession."
Yeah, I mean, again, like why do we care? Okay, fine. That's not a recession. You've got 2 quarters of negative GDP growth and you've got layoffs and job free hiring freezes building. Why is any of that good news?
It's We live in a world where good news is bad news is good news, and I can't make sense of anything anymore. I really can't. I look at headlines, I look at stuff that rolls across the news feed, and I just go, what? What?
Yeah.
What are we living in? It's literally. It's not like we're living in a simulation. Not to go to the Elon Musk thing. Hey, Christoph, how is it? Oh, how is it going over in Europe? What's the update with natural gas and Nord Stream 1? Hey, Patrick, administration claims 2.7 million jobs added during period, but data suggests jobless claims rising and growth.
Hey, we've had 7 consecutive weeks where initial weekly jobless claims have been higher than analysts expected, and 10 of the last 12. So again, it's just another, I know it's versus analysts' expectations. I'm not saying they were higher each of those weeks, but analysts expected them to be lower and they missed each time. So, things are not good. Don't call it a recession. I don't care. I mean, why would I care about that?
But it's like we got to label everything, and like the label has more reality than what's actually going on. That's what I'm getting. And I'm not just talking about the recession thing. I'm literally talking in everything. People are more worried what a word means than what's actually going on.
Right. And this is what I'm coming out here to say. Like, I almost tweeted it, but I decided to say here instead, who gives a shit? Who cares if it's not technically a recession or not? It's terrible. These are terrible economic conditions. And I'll tell you what, a recession is much more desirable than stagflation is. Much more desirable. Much easier to get out of a recession than to get out of stagflation.
At least in a typical recession, prices are dropping along with everything else. Now we have prices still elevated and other things are dropping, like employment. Oh, boy. Yeah, economic confidence is eroding. Okay, Eric, we live in Absurdistan. Pretty much. Paul asks, wait, so what is a recession? 3, 4, 5 negative quarters or until the election is over?
I actually have it.
There's the official, but don't the certain number of people they have their definition and then they have to vote on it? I mean, it's absurd at this point. Why don't they just make it literally so people can spot? I don't think they want it to be spotted because then people could say, hey, we're going into a recession. And then they couldn't say, no, we're not.
Right. Literally, Jeffrey Moore, who's on the National Bureau of Economic Research, wrote a book that you can purchase on what a recession is.
Well, so do we have to purchase the book to find out?
I mean, okay, so it's on a couple of websites. I looked at one of them today. Hang on a second.
Let's see, Christoph. Once we're through the current week, there's so many earnings that can shatter the broader market, or is that it? We entered a quiet summer period. There's still more stuff.
There's still plenty of stuff.
Yeah.
Doesn't have to be tech led.
I mean, we got more stuff in the pipeline, and remember, it also gets to a cumulative. All right, because Bob was citing the percentage of companies that beat EPS, percentage that beat on revenue, and if that keeps dwindling or dropping, it's that cumulative effect that erodes further market confidence.
Are you ready?
Yep.
The National Bureau of Economic Research definition emphasizes that a recession involves a significant decline in economic activity that is spread across the economy and lasts more than a few months. Now I'm going to not read all this and then say, because a recession must influence the economy broadly and not be confined to one sector, the committee emphasizes economic-wide measures of economic activity. The determination of the months of peaks and troughs is based on a wide range of monthly measures of aggregate and real economic activity published by the federal statistical agencies. Those include real personal income less transfers, non-farm payroll employment, employment as measured by the household survey, real personal consumption expenditures, wholesale retail sales adjusted for price changes, and industrial production. There is no fixed rule about what measures contribute information to the process of how they are weighed in our decisions. In recent decades, the two measures we have put the most weight on are real personal income data less transfer and non-farm payroll employment.
Okay, so hold on. To sum this up, A, that was a word salad. B, they got a lot of inputs, but they don't have any defined formula. C,
Right.
recently it's been in favor of employment and wages, but that could change in the future. So it's only when they decide that
Exactly.
so it's garbage.
It's garbage. And this is what I think I've finally come to grips with what my tweet needs to be. Because the definition of recession is not technical and is fluid, we're in a trans recession. No, I'm not going to say that. Because it's can't be pinpointed, it no longer matters whether we're in a recession or not. It just doesn't matter. It's an after the fact thing. It's like talking about a thunderstorm that happened 3 days ago. Who cares?
Coco, although put a spin on it, here you go. Stagflation is more desirable than nuclear war or alien invasion.
The aliens could be friendly invaders.
Well, who are they taking out if it's an invasion? It wasn't alien contact.
Well,
it was
no,
literally invasion.
What's the technical definition of an invasion, Mike?
Okay, Coco, define invasion for us. You're the one who put it in there.
I once lived in a house that was invaded by cockroaches. They didn't kill anybody, but I didn't want to be there.
Okay, well, all right. Oh, great. We have to ask Elon. Fantastic. We're all doomed. See, we're doomed. Wait, what does Waka Waka put in here? Alphabet CFO says foreign exchange impact to be even greater in current quarter. So that's sort of a guidance for next quarter might even be worse. Yep, rip Q3. So there you go. Is it going down even more? I mean, that's like saying, yeah, it is going down even more. Oh boy. Energy situation in Europe has no solution for at least 18 months. No way around curtailments, but EU member states divided. Good luck getting the poor South helping Germany. It's going to get interesting. What's your take on the whole Russia Nord Stream, constant, we'll give you a little oil, there's another issue, blah, blah, blah. Are they just toying with everyone?
I'll say this. I think that the fact that they're reducing supplies now, they're trying to put themselves in a stronger position for winter to yield influence. That's honestly what I think. So, when I saw that this morning, my initial reaction was, okay, we had a conversation with Christoph, which basically said, if we get Nord Stream turned back on, we'll be in good shape through winter. Well, that was prior to this announcement. So my initial thought was, okay, so they're trying to weaken the position of the EU prior to the winter that is destined to arrive in a couple of months. So that's my take on it.
Energy companies trying to ramp up coal production, but not enough barges to move the coal to the plants. Also, the drought is a major problem. Rivers without water. It's just like the perfect storm over there.
Things are just horrible. Things are horrible. I mean, I don't call it a recession. It's still one of the worst cumulative times for working people that I've ever seen. Just with
It's
everything,
just a nightmare.
starting with the vaccine mandates and the closing of the economy and everything else. I mean, it's horrible.
It's been. Can we just have a do over on this decade so far? Can we like restart it? Uh, John asked, Bob, do you think UEC is a buy? It's a uranium ETF. A lot of YouTubers are talking about it. Also, do you think it will replace natural gas? Well, you're not going to replace nat gas, okay? And
No.
UEC is based off the potential, and I am long term very bullish on uranium. I can answer that aspect because you can't put in enough wind farms, you can't put enough solar. There's issues with sustainable energy stuff like that. You need to, if you want to get away from coal and fossil fuels, you got to go to something like clean nuclear power with
Right.
limited nuclear waste. And all these nuclear plants, and I'm not just talking in California or anywhere, but all around the world, especially in Germany, are slated to be mothballed or already mothballed. You're going to have to bring them out and refurbish them, or because it takes a while to build a new one, and ramp up other mostly clean energy production. Okay, for some reason, see, I'll go on, you know what? I don't know why the greenheads went completely berserk against nuclear power when, for the most part, it is, yes, it does generate some nuclear waste, but however, it's an incredibly clean source and very sustainable source of energy. So you want to get off of other stuff. You should have been focusing on nuclear power as you're trying to get things like solar and other renewable energy sources to a greater efficiency level. Instead, it was like trying to do everything with wind turbines and solar, and now we get rolling blackouts all over the friggin' place, and countries are in major energy deficits. Sorry.
It's okay. We're on the exact same page. I mean, nuclear is the only solution if you want it entirely clean. And this might be sort of a biased statistic. It might have factors into it that I'm not aware of. For example, well, let me rephrase it. In the history of nuclear power, there have been fewer deaths based on nuclear accidents than there have been on solar and wind combined. There's been multiple deaths in solar and wind. Neither number is that large, but it also could be because nuclear power plants have been shuttered, so there's fewer and fewer problems. The issue is there haven't been major accidents except for the two or three, and the overall death rate on those, if you take Chernobyl out of it, like you look at Fukushima, it hasn't been that bad. But if you're going to look at transitioning to clean energy, there has to be a transition fuel. Uranium, it's a long game for uranium. I don't know what the sort of background and credibility of the YouTubers are. I personally wouldn't start anything with I'm buying things because YouTubers said so, but I guess that Mike and I are also YouTubers. We just also have a combined 60 some odd years in the markets. So I certainly wouldn't buy anything because YouTubers said so, but I'm with Mike on being long-term bullish nuclear. And if that means uranium, then I'm in. But it's not something that's going to, John, a lot of times when YouTubers get on stuff, they pop quickly and then they sit and sit and sit and sit. You know, very similar to those IPO things that I don't know if it was you or somebody else that was talking about, where those things will pop for a day or two and then they just fizzle. You really, well, anyway, I'm done.
Well,
I'm
yeah,
very bullish nuclear. There just has to be a political awakening in order for that to happen, and it's not going to happen currently.
no, and it's going to take a slow ramp up, and that's why. And I actually prefer URA, or I really prefer the Sprott one, but that's only traded on the Toronto exchange so far. But that's why I say, if you're going to, my perspective, and again, I can't give specific trading advice to everybody because I don't know your situation, but those are the kind of things I like to trade around core positions because they can
Right.
go back and forth and you get to harvest some price action while you're waiting. So essentially, you're lowering your cost basis by trading in and out of something. You're always keeping somewhat of a position on, because you never know when that pop's going to happen. But meanwhile, you're using key levels, and I use harmonics to trade around a core position. And then when the pop occurs, you add to it and let it run. So that's the thing. But again, this can take a while. And if you look at URA on a monthly basis, and then we'll get back to some other stuff, you can see. I mean, this you can see how far it's come down, and we're still building a long-term base. And this, once it breaks out of this long-term base, it will get very interesting. George asks, Bob, this is for you.
Yeah.
If there is no Federal Reserve action, neither loosening or tightening, what situation would the markets be in?
Wow. I mean, there's been so much of it, George. I mean, I assume you're going back to the financial crisis. Um, it's hard for me to say. It's almost impossible for me to say because I'd have to go back to 2009. I mean, it's funny. There was a friend of mine years ago when they first started QE, quantitative easing, buying of assets. He said to me, "I will bet you this will never end. That there'll never be an end to quantitative easing. They'll never stop buying." And when they made their first announcement that they were done buying, I expected to collect on my bet. And we didn't actually make the bet, but I came to him and I said, I can't take that bet because saying that they'll never stop buying assets means like the Fed has to be dissolved for you to win, right? Because in other words, if they would just have to continually buy and approach never in order for you to win this bet, and that can't happen. I mean, if they stop buying 150 years from now, you lose, right? So I didn't want to make that bet. When they first stopped and then they resumed again pretty quickly, I guess I kind of understood what he was saying. So there's just so many levels of asset purchases and Fed intervention. Honestly, you can go back to Volcker, but I wouldn't say Volcker was necessarily doing what's going on now. That it's just impossible for me to say. I would say that the financial crisis was where it really, to me, became obscene. You can go back to Volcker, but and it's not only that; it became obscene from a perspective of people started calling it manipulation, and they weren't wrong. But not only that, but the bailouts combined with that, where people that actually committed financial atrocities served no jail time. They did nothing to those guys. They took people's homes away, but then those guys basically got. Wells Fargo is another good example. Wells Fargo stole millions and millions and millions of dollars from people with false fees and just had to pay a fine. It's very similar to what goes on in the pharma industry, where pharma has the largest fines on record and they pay them and nobody ever goes to jail. They just go on with their next one. Their fines never equal their profits. I'm going off on a tangent here. I don't know. Basically, I think the overall economy would be a hell of a lot healthier, without the Fed intervention.
I agree, but it's now so distorted. You can't just say, "What if they stop now?" I mean, and I think they should stop, but it's already. We wouldn't have had this massive run up from. We wouldn't have had what got us to this state if we did not have the Fed intervention. So now, unless all of a sudden you're going to dissolve the Federal Reserve tomorrow and then sort of go, okay, I think asset prices would gravitate back over a period of time to a more sensible valuations. Right. Because there wouldn't be this. Look at what's already happening. Sorry, I'm removing some of the spam crap comments while we're talking. But look at what's already happening, because people are like trying to justify, is the bottom in? When's the Fed going to pivot? Because I want to front run the Fed pivot. They're already back to we want easy money again. They're already going back to we got to go on QE. We got to pump the system full of easy money to keep the markets up. So you think if we're going to take that away permanently, that input would dwindle because there is no let's pivot and get back to zero or negative rates and easy money. So my head's going to explode.
That's one of these days it is, sure.
Eric, the EU, we shot ourselves in the head. Yeah, pretty much. So if the Fed doesn't do anything with inflation or recession, we go back to the bull market. If the Fed doesn't do anything with inflation, no, you.
Oh, the Fed caused inflation.
Well, I guess if the Fed just stopped and produced, like, started cutting again, and we went to hyperinflation, that's actually good for the market until it implodes, because all assets keep hitting inflation. Look at hyperinflation markets in third world countries. Their stock markets explode until their currency is worthless.
Like Nouriel Roubini had a Bloomberg interview. Dr. Doom is his nickname. He predicted the 2008 crisis. It wasn't just Burry and those guys that did. Nouriel did as well. And he basically said that this part's a quote. Anybody who thinks we're going to have a short and shallow recession is delusional. And this goes to Michael Jones's question. He said, because we have a debt bubble and we have way too much debt, and we're going to have a corporate debt and personal debt strain during this next recession that's going to cause it to be severe and long. I would argue that that's when the Fed is going to come back in and, try and fix the markets again, because they're now a political animal. And then when that happens, they're going to temporarily save the market for the really, really big problem they're not going to be able to fix. That could happen in 2024, 2025. I'm not prepared to predict what year that would happen, because I don't know when the Fed's going to get involved again. But John A., I think you're trying to oversimplify a very complicated situation that the Fed did not let self-correct. Okay, the Fed, and again, I'm not blaming the Fed. The Fed's a political animal now. I mean, whether you're pro-Trump, pro-Biden, or anti-both, or pro-both, or pro-neither, I mean, Donald Trump was out there trying to pressure the Fed to leave interest rates low in 2018. They're a political animal now. It's not just this particular administration or Democrats or Republicans. The Fed is political, period. I mean, they've proven it over and over again. So when you try and simplify it and said, so if the Fed doesn't do anything, this might happen, it's just no longer that simple. It's a complicated mechanism at this point, because there's not only are they going to, so when you say are they going to not do anything, does that mean they just let the balance sheet run off? They don't actually sell things. They leave rates completely alone for how long? Forever? Just during the inflation spiral? Does the inflation spiral actually self-correct? Do we allow the MMT guys to implement, well, I shouldn't say we allow, not we would have to vote them out. Do we allow MMT to implement the one thing they say you do during an inflation spiral, which is raise taxes? There's just too much there for me to say, yes, that's what happened. That's not what it is.
RIP free and rational markets. They were RIP'd a while ago. Bob, any more insight on weakness in the credit market, corporate or otherwise?
Credit default swaps in Italy and a lot of Europe are blowing out, like in a bad way. So when you look at it from that perspective, it is really ugly in Europe. U.S. is wider but stable, but it's really, really ugly in Europe. And that's kind of the contagion that I think Nouriel Roubini was referencing. Again, and I talked about this last week, when the ECB hiked rates this past meeting, but also introduced a new, basically unlimited tool to buy assets, they blew credit default swaps out, especially in places like Italy, because those two things kind of contradict each other. Now, again, nobody is using the transmission mechanism protection tool yet. No one's using it, but it's there, and they don't create it to not be used. It's going to be used by somebody. And when that happens, go ahead, Mike.
We'll see a TPS report at some point.
Yeah, when the transmission protection instrument is actually implemented, it will be working against the European Central Bank tightening rates.
This is getting exhausting.
It is. I mean, people ask me questions, and I know what's happening, but I don't know what the result of it's going to be.
Hey, Sterling asks, can either of you come up with any potentially reasonable justification for selling our strategic oil reserves? One, to any nation, two, to China.
No, no,
The
no. I mean, look, not only are we emptying, we're not emptying it. I mean, it's not near empty, but it's probably halved at this point. I mean, if they do another one, it'll be halved. And at the same time, using regulations and other things to choke off the ability to actually produce oil here. So it's really bad.
You want my not so conspiracy theory? I just think they want to. You got so many greenheads in here that they literally think it's a good idea that everybody can go get an electric car. And you know what? If we have no oil and oil's like at $10 a gallon, well, that solves the problem. But it does.
Yeah, I mean, the
It
mayor
doesn't.
Pete, the mayor Pete let them eat cake moment was just
Yeah,
priceless.
that's actually, I think you have so many people in areas of power and influence that literally it's like the big, the big announcement with all the wind turbines in the Gulf of Mexico. Literally, you're going to put wind turbines in the Gulf of Mexico where we get hurricanes, which will be, and you know the amount of oil. What's so ironic? Did you read the stats and the amount of oil it takes to lubricate those things?
Yep.
I mean, literally, you're not getting rid of your oil. It's absurd, and you're putting them in an area when you get a Cat 5 hurricane to go through there. Forget it. I mean, oil rigs already go down, and they're built like a brick crap house, and they go down in a Cat 5. What do you think is going to happen to a wind farm in the
I know.
Gulf of Mexico?
I know.
It's like putting a solar farm in Seattle. Well, okay, it only works 30% of the year.
I know.
Uh, I, literally,
That exploded.
it is. I'm scared that turtles are going to get hurt. And if I keep getting this spam, who wants to be a moderator of this crap spam? At least we've made it. At least
We have made it. There's spam in our chat room.
we have made it. We keep getting repeated spam bots.
Tell you,
Yeah.
if I hadn't already found love, I might take them up on
Oh, not this, Bob. You don't.
it. I'm kidding.
Yeah, you'd think, you know what? With all they're worried about with this, they can't sort out these spam bots. I mean, it's literally when you see the same thing getting posted, is that spam or not? Well, I've reported it 14 times. Oh, gosh. When can we get back to a bull market?
I give this podcast or this particular live stream 3 meatballs.
Three meat. Uh-oh. What did everybody think of the most recent Jim Iorio Futures cast? Get your thoughts on that.
Get your thoughts out there.
Patrick, solar farms here in Minnesota are covered with snow for a good part of the year. Well, that's the brilliance of it.
Solar farms in Minnesota.
Oh,
God.
it is horrible. Any other thoughts before I got to get to some markets before literally I'm going to.
I'm good. There's not much to talk about with this meeting tomorrow, so um, I'll likely try and make some time to come on tomorrow after the. I don't know if I'll be able to, but
Well, if you can, just let me know. It would be
yep.
helpful, even if it's like 10 minutes.
Yeah, no, I know. I'm planning on it. So Eric says this is hilarious.
Hey,
Not to us, Eric. Not to us.
hold on. One more question. This is the. Bob is bullish, so I'm bearish. I don't think Bob's bullish.
I'm not bullish at all.
You better be bullish because Bob's bearish.
I'm bullish Coco.
You're bullish, Coco. You mean the commodity or the
No,
person in the chat room?
person in the chat room. So Coco, if you're doing the opposite of me, you're bearish yourself.
Bob and Mike, why is the dollar so strong considering all the money printing we have done, and what will it take to bring it down?
So the dollar is always relative to something else. So let's take it, for example, versus the euro. Okay. The euro as Christoph and then Mike and I just talked about, is about to have worse energy inflation that they already have. Okay. They're tightening rates and putting out an asset purchase program. Okay. So the euro is weak. When you sell the euro, what do you buy? You buy the dollar. The UK is the only country that has higher inflation than the US. They're 0.3% higher. Canada just raised rates 100 basis points, right? But yet it fell. Why? Because their inflation's a lot lower. So overall, the dollar is a safety asset in this kind of climate when all the other currencies are even weaker than the dollar is. Remember, you can't just buy a currency with air. You got to buy it with something. So they're buying the dollar with their own currencies because it's a safety asset. So it's relative interest rates and overall safety is what drives the dollar. It's not just what's going on with our Fed. It's what's going on with our Fed relative to what's going on in the rest of the world. And the rest of the world is worse. So that's why the dollar is strong.
Isn't that comforting? That's super comforting.
Yeah. When everything is going to crap, I'm using Mike's word now. When everything is going to crap, the dollar's where you go. So, I guess we could buy monkeypox, Rich.
Oh, boy. One other thing. Bob, do you think J. Powell is hawkish tomorrow?
Yeah, I think he remains hawkish, yes. I think it's too soon for him to pivot to a more neutral stance. But again, given the CME Fed watch tools only at 75%, there could be surprises in either direction. They're doing 75 basis points or more.
Yeah, they're really not doing 50.
No, but it's really going to be what he says about the meetings going forward. And if he says, things are starting to slow down, so, we could possibly move away from 50 going forward, he could say that. But I'll tell you what, if he says that they're hawkish inflation with that last 9.1% print, wow, man, people will come down on him hard if he's not hawkish. So, yes, I'm going to go with he's probably hawkish tomorrow, Ted.
Well, Rich thinks it's 100 basis points tomorrow.
No, there's a 25% of the market agrees with you.
All right. We'll wrap it up with Bob for now.
I will say this, and then I'll let you wrap it up with me.
Sure.
If they do 100, I think it's more likely that Powell then says they're going to back off soon.
Well, that would get them closer to the neutral rate faster.
Right. So, yeah, the Russian ruble is stronger than it was pre-invasion.
Yeah.
So there you go.
Yeah, right. I agree. The response has been disastrous, but that's for another day. My head's already done.
I will chat with you guys tomorrow.
Thank you for being here, Bob.
See you guys.
Bye. Hey, everyone. How is everyone doing? By the way, thank you for everybody who reports the spam comments. I've been trying to do it too. I brought up another browser during this. That's why you saw me glancing away. I was still paying attention. I was just trying to report this because that just ruins a live stream, in my opinion. And again, thank you so much for everyone being here. Let's just glance at stuff again. It's a pretty decent sell-off. I did put up the levels just from these sloppy head and shoulders, even on the S&P with the double head. So you see the S&P coming down, pausing at the first target, and then reversing. Actually, looks like it did trigger a little mini double for overnight. So that's a 39.48 roughly, 39.53. 39.58. So those now are going to be upside short-term targets for overnight. Again, we might have some muted trading overnight because we have all that stuff coming out tomorrow. To the downside, I'm just going to use the next little window, the prior level I had on there, to 39.05 to 3900, where the second target for the sloppy head and shoulders is. So that's my downside target. And if there's something disastrous, 38.80. Again, if you went up higher on the 1 hour 39.73, those are the levels, but it should be overall pretty quiet, again, unless something shocking comes out. Uh, so that's where that stands. Just a recap on the daily. You have, sorry, it's a little glitchy here on this setup still, doing my best. You have closing back above, actually spiking into the rotation zone, spiking into the prior resistance becoming support, and then closing back up on, not up for the day, but closing back up off the lows. Cycles still heading down on the daily, and right at the tipping point on the weekly. NASDAQ, I don't remember who, and I can't scroll back through all the comments. That's not a 1 hour double bottom. It went down too low, but you are into a clear path move. We're roughly using the breakdown zone. So minor target on a rally overnight is 12,231. Major target area would be 12,272 to 12,292. On it, you can see that was the second target for the sloppy head and shoulders and the 37.5 harmonic. If it rolls over, 12,012. So essentially 12,000 is the next key level support. Then on a bigger disaster move, 11,879. I'm just going through these a little quickly. I'm a little tired now. You guys got me riled up. Again, bounce off the rotation zone, dip in below the prior resistance becoming support, but closing up nicely. Still cycles rolling over on the daily and on the verge of rolling over on the weekly. So, Dow, a very narrow range day, coming down to test that 31,656 support area and the weekly rotation zone, then bouncing. So that's my key area. Overnight, not much watching much besides the resistance zone being about 31,868 to 31,900, and the support, initial support 31,645, and then about 31,467. Russell, I don't need to go through all this right now. Russell caught in the range. So I'm just using still these areas, 1822, 1798. Let's take a look at the DAX. Again, nice little pullback to the breakout zone. So this is very key. On a further pullback, the double is still in play. 12,905 if it continues to pull back. On a rotation back up, you actually have a percent B resumption buy on a close back above today's high, 13,197. Crude, which we got that little draw again, but again, bouncing off against that 25% harmonic, caught in a range. My key areas, again, are a 101 or to break down below 94.13, and then watching for that daily close back below that, as I've talked before. Natural gas, spiking to highs, topping tail. I said I was watching for the pullback. Now I'm going to watch for a more substantial pullback. My pullback zone is roughly, based off the daily, let's see, this was the 4 hour. Got to use the daily on this roughly. I'm still going roughly between 836 to about 810 at this point. Don't need to touch on the precious metals. We can glance at those tomorrow morning. Dollar index, still pretty strong reversal day. This was an aggressive percent B buy, rotation up. So on a follow through tomorrow, I'm 107.57 and then 108 are my target. Stop has to be below 106, so 105.95 area. VIX, a nice little break. I talked this morning about this 3 high area. We broke above it, ran up, and then closing right at that area. So that's what I'm going to be keying off of tomorrow morning with the VIX. Bitcoin, remember Coinbase, SEC looks like more action finally. The key area for the major next breakdown move is 20,175. So cycles are getting the bottom on a daily basis and still within this channel. Let's just glance at Coinbase real quick, because this is gonna, all the stuff coming out on Coinbase is just negative. We had that little double top, gapping to the third target right there. I'm expecting Coinbase going to new lows, by the way. But your first area of support is about 45, and you break 45. My next major target is $30. But all that stuff coming out with a wash trading employees' accounts, that, boy, Coinbase, I see Coinbase eventually going away. Tesla, finally getting a pullback move to the breakout zone. Remember, we had this 775 area on there, pretty much closing right at that with the daily rotation zone. Next major support, I'm just watching for this gap fill on a pullback move. If we continue tomorrow, 754 to roughly 742. We get a close below that, then I'm targeting the bottom of the support zone, and then we get the close below that 62.5 move. I am then going back to full-blown bearish mode. Let's see. Let me get to, I didn't get to notes yet. Notes, by the way, triggered that head and shoulders on yield, but not yet with this. It confirmed the head and shoulder neckline, but has not triggered it yet. Okay. So it's been triggered on yield, but not on the futures themselves. So still watching for that. On the shorter term basis, we do have a little mini double top. That still wouldn't invalidate it even on a pullback. But I'm watching 119.15.5. A close below that, at least on a 1 hour. Remember, one of the things is if you want to be more aggressive, use, unless there's news coming out, the only time I go bigger than a deviation of one time period is if it's like playing a Fed thing. But tomorrow would be a 1 hour. If we got a 1 hour close below this, then I would be watching for that pullback. 119.02, 118.27, 118.20. Let's see. Netflix removed Breaking Bad. Should I use short the stock? Short it. I don't want to know why. Oh, I can't trade in hot weather. Well, where are you trading? Are you sitting on a beach or something? It's not futile, Ted. Just keep reporting it. Hold on. Both the 10-year and 30-year futures have head and shoulders in play on the daily, along with potential mini double bottoms after today's price action. If you were to trade one, which would you trade? I'd trade the 10-year. I'd favor the 10-year. It's more sensitive. Because again, a lot of times you don't want to. If you really wanted to, you could divide. Let's say you're doing 2% per trade of your portfolio. You could go 1% in 1% in 10-year, 1% in the 30-year. If you just wanted to decide on one, I'd choose the 10-year. Let me just look at this real quick. I'm running out of energy, guys. Sorry, whatever your preferred pronoun is. Don't want to assume anything, and I know there's ladies in here too. I just use that as a catch-all term, so don't slam me. I know, no, you know what? We got a really good crowd here. ABBV, you're in a pullback channel. There's no great pattern right here. It's either a breakdown or breakout play. Cycles not at the top. Mismatched cycles. There's no great pattern here on ABBV. And I don't have a fundamental perspective. Although you start getting, I just wait for a breakout or breakdown play. And I don't trade this one. Let me just look for there's a significant area here. I'll just go with the bottom one for here. There's actually two significant levels there. You get a close below 146.65. I'd be targeting 141 area and possibly even this gap fill, but I'd be watching this 200. And the breakout play. See, sometimes there's just not a trade. With mismatched cycles in the middle of consolidation, it popped down from the consolidation before, and you have earnings coming up on the 29th. And that's going to determine it. So I'd wait post-earnings for either the breakout or breakdown play. Your breakout plays roughly around 155.50, possibly a little higher if you want to go. The significant level is right here. There's your significant level. 156.31. So if you want to use significant levels, you're waiting for a breakdown below 146.65 to the upside 156.31. UNG, Natty Gas. Again, I already covered the futures. This did not break to new highs. I'd be watching for the pullback play in this now. After retesting this top area, based off of UNG, it did not break to new highs like the futures, but I'd be keying off of roughly 28.20 to 28.80, watching for, especially with cycles at the top on the 4-hour, cycles at the top on the daily. I'm going to bump that down. Sorry. I'm going to give you 28.30 to about 27.30. I'd use this area. I'd watch for a minor bounce. Depending if you're trying to scalp something intraday, that would be your levels on the 4-hour. But I'd use the daily levels if you're looking for longer term. For a come back to rising rotation zone and this prior major resistance, test there, gap above becoming major support, especially with cycles on the top on the daily, on the 4-hour, and entering the top on the weekly. Those would be my key levels for that, for a longer term play. UEC. Again, UEC, I like to trade anything uranium around a core position. So that's where I like to use the harmonics. Again, the down, it's technically we should still hit on a pullback 287. Didn't quite hit it yet. So dips, this would be a buy area down here. Then I'd like to do a sell back at 339, and on a pop up to around 388 to 390 is another sell, and then a buy, and then a sell. It's trading around these core positions. But right now, if you're trying to not trade around a core position, your breakout moves roughly above 370. Your breakdown zones roughly below 303, $3. If you're just trying to do an overall trade, otherwise it's just range trading within that range. There's your key levels, and by the way, this $3 is virtually a significant level, and almost this 370 looks like it's a significant level. Why? Because you have emotional candle going through it. I'll retest with a gap up and a key close there. Emotional candle going away. Some crisscrossing emotional candles, a key gap open to that level, retested with the high, and a key close right on that level. So that's your significant level. Those are the levels I'd be utilizing for breakout or breakdown plays, or if you're trying to trade in a range. Can we peek at ARC? Sure. ARC triggered the very aggressive double, and the stop level is, I'd actually be aggressive with this. The aggressive stop's at 40.40. The conservative stop on a closing basis at 39.61. Other than that, I mean, I don't like to play cycles at the bottom, but we'll just have to see going into the Fed meeting. Again, I'm no long-term fan of ARC. You're welcome, Sterling. Baidu foreign. Oh, you know how I hate triangles. They are not. I'm going to give a lot of people who's newer here the secret, and no, that's not a triangle, at least on the daily. That's way too slight. People call that an ascending triangle. There is not a lot of probabilities associated with triangles. It's too close to 50-50, even with ascending or descending triangles. So just go, and here's the problem with it. Let's say you're drawing this triangle pattern, ascending triangle, because you got ascending bottoms. You break down below this line, you got a stopping point here. Where's your next stopping point? Here. And look, see, because down here is pretty much a significant level again. So stopping point, stopping point. So this is where if people are trying to do price projections a lot lower, it could catch here and still stay in a horizontal channel. That's why I hate it. Baidu, a breakout minor level is 144.57, majors about 146.40, and then you got to play for the gap fill. Breakdown level below 135.90, I'd target 131.60. Below 131.60, you're into a clear path move, and you have a gap fill, and I target the gap fill down to 119.32. Sterling, that's a big question because it's going to affect. Are you just talking the long bonds like the 20 and the 30, or are you talking just? Are you using bonds as a euphemism catch-all for all notes, bonds, and short-term instruments? Because it's going to affect different things differently. The longer term things like the 10-year notes, the 20-year bonds, the 30-year bonds are going to more trade off of longer term expectations with recessions and Fed decreases in the rates, Fed cuts at this point. The short term end of the curve are going to trade more so off the hikes. So you got to look at that differently, which is why you get the inversions and everything else. So tomorrow the Fed hikes, you're going to affect more of the short-term end of the curve. And longer term, it could be, hey, if they hike and we're going into a recession faster, you know what? I want more money could flow into the longer-term bonds, which could actually reduce rates because I'd rather own them here, especially if we're tipping into a recession, because those rates will start going down as the Fed cuts and as we go into recession. So I'd rather own them here with a higher yield than a lower yield as we tip further into recession. That's why I got to trade it technically. You're welcome, John. You're welcome, Paul. Again, thank you everyone for being here. I'm going to wrap it up for now. Hope you enjoyed this live stream. Please come back and leave some comments when it's over, not just the comments during the live stream. Please come back and comment so it can get wider distribution. With that, I'm going to call it a day. All right, Sterling, thank you. And I will see everybody bright and early tomorrow morning. Remember, 30 minutes before the open tomorrow. Do not ignore this, please. Don't just focus on the Fed at 1:30 Central. 30 minutes before the open, durable goods. All right, that could throw some fuel on the fire for the opening and pre-open. So do keep that in mind. Don't just get tunnel vision on the Fed. You are welcome, Jacob. Again, please do come back and leave some comments. I'd like to get this information out to more people rather than the YouTube channels. And I'm not criticizing anybody. You know, they have their channels, but I really want to get this wider distribution to more people who want a different take and not just the entertainment value, sort of we're not the Kramer of YouTube. We're sort of the more, I don't know. Are we more sensible? I hope so. I hope we're more grounded. You're welcome, Eric. You're welcome, George. We're trying to be like a counterbalance to pump and dump to the Kramer-esque and actually provide valuable information. We're not always correct, and we have our opinions, but even from the trading technical point of view, try to provide a very well-grounded, balanced technical perspective to addressing the markets. So please, again, anything you can do to help the channel grow is appreciated. With that, I will talk to everyone tomorrow morning. Bye.